So, Bitcoin ETFs, they're everywhere right now, right? They've been one of the hottest topics in finance. But what exactly are they? And more importantly, how can you navigate this brand new world as an investor?
Well, you're in the right place. Today, we're going to break it all down for you, right here on the Cobber channel.
Have you ever wanted to get into Bitcoin, but the whole thing just seemed, well, complicated? Trust me, you are not alone. But what if you could invest in it just as easily as buying a share of your favorite stock? That, right there, is the core promise of a Bitcoin ETF.
To really get our heads around a Bitcoin ETF, we've got to start with the basics. What even is an ETF in the first place? You know, the best way to think about it is as a simple investment basket. Okay, so an exchange-traded fund, or ETF, is basically that regulated investment basket. When you buy just one share of an ETF, you're actually getting a tiny piece of all the different things held inside it. That could be stocks, it could be gold, or in our case, Bitcoin. And the real magic? You can buy or sell it in an instant, right from the brokerage account you already have. No fuss.
But you might be wondering, how does the price of this basket stay honest? How do we know it's fair? Well, it's actually a really clever system. You've got these big financial firms, we can just call them wholesalers, and their job is to watch the price all day long. If the ETF shares start costing more than the Bitcoin inside is actually worth, they jump in and create more shares, which brings the price back down. And if the price gets too low, they do the opposite. They buy up shares to push the price back up. It's this constant balancing act that makes sure the price you see is the price you should be paying.
Okay, so we get the investment basket idea. But why is this such a game changer for crypto? It's because this simple idea creates a sturdy, reliable bridge between traditional finance and the, let's face it, sometimes wild world of digital assets.
Because let's be real for a second. Buying crypto the old-fashioned way, it can be a massive headache. You've got to set up digital wallets, you have to protect these super long, complicated private keys, and there's always that nagging worry in the back of your mind about security, about hackers, and about dealing with unregulated exchanges. For a lot of people, that's just too much of a barrier.
And that is exactly the problem the ETF solves. It takes that entire heavy burden of security and storage, what the pros call custody, and hands it over to massive, regulated financial institutions. You get to invest in the asset without any of the technical nightmares. It's a beautiful thing.
All right, I need you to pay close attention here because this is probably the most important part of this whole explainer. Not all Bitcoin ETFs are the same. Not even close. You absolutely have to understand the difference between the two main types, spot and futures.
So let's put them side by side. A spot ETF is the direct approach. This fund actually goes out and holds real physical Bitcoin. Its only job is to track the real-time price as closely as possible. Simple. A futures ETF, on the other hand, is the indirect approach. It doesn't hold any Bitcoin at all. Instead, it holds futures contracts, which are basically just bets on where the price of Bitcoin is going to be in the future. It's a much more complex way of doing things. And here's the catch with those futures contracts. To keep the fund going, the manager has to constantly sell old contracts and buy new ones. This process is called rolling, and it can have costs. Think of it like a hidden drag on the fund's performance over time, which means it might start to lag behind the actual price of Bitcoin.
And that's why, when you look at all the analysis, you get this one clear takeaway. For the vast majority of people who are looking for simple, long-term exposure to Bitcoin, spot ETFs are just structurally better for the job.
Okay, so we've established that for most of us, spot ETFs are the way to go. So, how in the world do you pick the right one out of the bunch? Let's walk through what you should be looking for.
First up, and this is a big one, fees. It's simple really. The lower the annual fee or expense ratio, the more of your returns you actually get to keep in your pocket. And the competition to launch these new ETFs has been absolutely fierce, which is fantastic news for us investors. It has pushed fees down to incredibly low levels. Next, you want to look at things like liquidity and trust. Basically, is it easy to buy and sell? And you know, this number right here tells a heck of a story. The iShares Bitcoin Trust, ticker IBIT, pulled in a staggering $50 billion in assets in its very first year. That kind of money doesn't lie. It signals massive market confidence and means the fund is super easy to trade. But we have to talk about a potential risk here. It's something called custodianship. You see, most of the big US spot ETFs all use the same company, Coinbase, to actually store their Bitcoin. Now, that creates what's known as concentration risk. If that one company were to run into serious problems, it could affect a lot of these funds all at once. So if that's a risk you want to avoid, you might look at funds like FBTC from Fidelity or HODL from VanEck because they use different custodians. It's a way to diversify that risk.
So where is all of this headed? Let's pull out the crystal ball and take a peek at the outlook for 2025 and what might be coming next.
You can bet that the Bitcoin ETF was just the opening act. The industry is buzzing about what's next. We're talking about an expansion to ETFs for other top cryptocurrencies, maybe even new products that hold a whole basket of different coins. Some analysts are even predicting something they're calling the flippening, the moment when the total amount of money in crypto ETFs could actually overtake all the money in precious metals ETFs. And that could happen as soon as the end of 2025.
So when you step back and look at the big picture, the ETF is way more than just a new way to invest. It's a bridge. A massive bridge connecting crypto to the traditional financial world. And that leaves us with a really big question. Is this the thing? Is this the bridge that finally cements crypto's place as a permanent part of our financial world?
Hey, if this explainer helped you make sense of it all, do us a favor and hit that like button. And of course, subscribe to the Cobber channel so you don't miss what's next. Thanks for watching.